Join me as I try to make sense of today's crazy financial market trends and see if I can predict where things are headed. Staying informed about the latest financial market trends is crucial in today's fast-paced world, where economic shifts can happen overnight. Being aware of these trends can help you make informed decisions about your investments, whether you're a seasoned investor or just starting out. The financial market is a complex and ever-changing landscape, and understanding its trends can give you a competitive edge in the world of finance. Inflation has been a major challenge for investors in recent times, with rising prices affecting the purchasing power of consumers and the bottom line of businesses. Many investors are finding it difficult to keep up with the rapid pace of inflation, which can erode the value of their investments if not managed properly. The current inflation rate is a major concern for many, and investors are looking for ways to protect their portfolios from its effects. This has led to a surge in demand for assets that historically perform well in inflationary environments, such as precious metals and real estate. Market volatility is another significant challenge investors are facing, with stocks and other assets experiencing wild swings in value. This can be intimidating for investors, especially those who are new to the market or have a low risk tolerance. The uncertainty surrounding the market can make it difficult for investors to make decisions, and many are opting for a more cautious approach. However, market volatility can also present opportunities for investors who are willing to take on more risk, as stocks and other assets can often be purchased at discounted prices during times of uncertainty. The impact of geopolitical events on the financial market is also a major concern for investors, as tensions between countries can have far-reaching effects on the economy. Trade wars, sanctions, and other forms of economic warfare can disrupt global supply chains and lead to instability in the market. This can be particularly challenging for investors who have assets in multiple countries, as they must navigate the complexities of international trade and diplomacy. The current geopolitical climate is highly unpredictable, and investors must be vigilant in order to stay ahead of the curve. The rise of emerging markets is also having a significant impact on the financial landscape, as countries such as China and India continue to experience rapid economic growth. This has created new opportunities for investors, as these countries are home to a growing middle class and a thriving business sector. However, investing in emerging markets can also be challenging, as these countries often have less developed financial systems and a higher risk of instability. Investors must carefully consider the risks and rewards of investing in emerging markets and develop a strategy that takes into account the unique challenges and opportunities of these countries. Interest rates are a key trend shaping the market today, with central banks around the world adjusting their monetary policies in response to changing economic conditions. The current interest rate environment is highly complex, with some countries experiencing low or even negative interest rates, while others are seeing rates rise to combat inflation. This can have a significant impact on the value of assets such as bonds and stocks, and investors must carefully consider the effects of interest rates on their portfolios. The relationship between interest rates and the economy is also closely watched by investors, as changes in rates can have far-reaching effects on economic growth and stability. The performance of the stock market is also a major trend shaping the market today, with some sectors experiencing rapid growth while others are struggling. The current stock market is highly fragmented, with some industries such as technology and healthcare experiencing strong gains, while others such as energy and finance are facing significant challenges. Investors must carefully consider the trends and outlook for each sector and develop a strategy that takes into account the unique opportunities and risks of each industry. The stock market is also highly sensitive to economic indicators such as GDP growth and employment rates, which can have a significant impact on the value of stocks. Economic indicators such as GDP growth and inflation rates are also closely watched by investors, as they can provide valuable insights into the health of the economy. The current economic environment is highly complex, with some countries experiencing strong growth while others are struggling with recession or stagnation. Investors must carefully consider the economic indicators for each country and develop a strategy that takes into account the unique challenges and opportunities of each region. The relationship between economic indicators,